Well, hello everybody. Matt Fortier with Keller Williams Realty, and I am excited. I have some of my favorite people from Fidelity National Title here in Folsom. I've got Liz. Now, is it Tolan? Is that the
Tolan, yeah,
okay?
Tolan.
And Stephanie Sharp is lurking in the background there as well. Some of my favorite people from Fidelity National Title. We're here today to discuss Prop 19, and anytime I think about taxes and things, I get, I just see numbers flying through the air, and I've asked my friends here to help explain this, and so that you as the consumer, you as the person that might be looking to take advantage of this, can have the understand the simple approach to it. So without further ado, Liz, thank you very much, and go ahead and
Sure.
introduce yourself.
So I'm Liz Tholen. I'm project manager for Fidelity National Title. I have been with the company 25 years on Thursday. So, and was an escrow officer for most of it. So now I get the pleasure of basically presenting information and telling things in more of an easier, softer format. So this presentation is actually pretty basic. I pulled some of the information from the Board of Equalization. So those 4 slides I can actually send to you for your clients.
Excellent.
Super easy. And so this presentation is actually more of a Cliff's Notes version, so that we're not going to get all wound up in the tedium of it. So
Yeah.
I'm going to go ahead
like
and
that. I really appreciate that. So we don't need an advanced engineering degree to understand
no.
how to navigate this process and how it applies to people.
Exactly. So I'm going to go ahead and I'm going to pull up my presentation. I'm going to tell you that there's a lot of great pluses. There's a couple of tiny minuses, but I'm going to talk about both of them.
Okay.
For a real estate standpoint, for someone who wants to buy and sell and buy and sell and buy and sell, it is phenomenal. And it's kind of crazy that we don't hear a lot about it. So here we go. Where are we? Oops. There we go. All righty. Everybody can see.
Yep.
California Proposition 19. Okay. So this particular law was actually passed. It seems crazy for me to say that 2 years ago, in November of 2020, this was passed. So during COVID, we didn't hear much about it, but we did pass it. We voted on it. We passed it. It modifies Proposition 13, and it basically completely supersedes Proposition 60 and 90. Now, all these numbers don't really mean anything. So I'm going to tell you what 60 and 90 were, just so you know that we got the better end of the deal with Prop 19. Proposition 60 and Proposition 90 allowed you to transfer your tax basis from some counties to some counties in California. So you couldn't be sure that any county you wanted to move to in California would allow you to transfer your tax basis. And you had to be 55 and over, you had to have a couple of other requirements, and you could only do it once. So we got rid of Proposition 60 and 90, which were very limiting. And Proposition 19 allows a lot of additional great features in all of California, and it also allows you to do it up to 3 times.
Oh, wow.
So
that's new. So the two things I think the big differences here are that for people that may have been familiar with the other two, especially the Prop 90, the intercounty, I can now, well, I'm not 55, so but someone that's 55 now can choose to move to any county within the state, and that county does not have to opt into it anymore. So they're free to be able to choose where they move and take advantage of it. Is that correct?
Exactly. So it's every county. It applies to people who are, they can be 55 and older, or they can be permanently disabled, or they can be a victim of a natural disaster, which includes the Caldor fire and a lot of other fires that we've had. So you don't have to have all 3. You can have just one. I actually qualify now because I'm 55. So it's actually pretty cool. If I wanted to sell my house and buy 3 more, I could keep doing this. Excellent. The other fantastic thing that we're going to get to in a second is that you can buy a property that is of higher value. So with 60 and 90, your property had to be a lesser value.
Oh.
Now you can buy anything you want. Of course, you'll pay the difference, but you're still using your old tax basis plus the difference. There's a slide in here that gives you an example of the new calculation.
Oh, very nice.
So we'll get through here. So the property used to be only of equal or lesser value. Now you can buy up. It is now in between any county in California, and you can do it up to 3 times. Pretty
Now,
awesome.
these have to be personal residence, or could it be a second home, or what?
No.
Are there any restrictions on that?
Yeah, it has to be your primary residence.
Okay.
Yeah, so you can't be doing this with your investment properties.
Okay, but in not even a secondary home, like if it's not like if it's my vacation home, does that apply?
Does not apply. It has to be your primary residence. So you can only have one primary residence in the state of California.
Gotcha.
So so your primary residence.
That's very helpful and very good to know, because there might be some people out there that were thinking, hey, that home in Tahoe, we got to primary.
This is what you could do. The IRS views that it's your primary residence if you live there for 2 out of the last 5 years. Mm-hmm. You could always move there for 2 years and then sell it and buy something else. So
gotcha.
it's always
consult your tax professional for those kinds of things.
Always, yes, exactly. So again, we're going to talk about the great things that Proposition 19 allows us to do. You can live anywhere in California. You can use this transfer up to 3 times. And you can buy a property of a higher value. Proposition 60 and 90 did not allow you to move anywhere in California. You could only use it once, and you had to buy a property of equal or lesser value. So this is a fantastic new law that gives great benefits to people that are looking to move. Okay. Though now I said there was a bad thing. So here we're going to get to the bad thing. So if you are someone who is going to inherit a piece of property, and it used to be in California that you could give your children property and they could keep their tax basis, they can now only keep the tax basis if the property is their primary residence.
Okay.
Yeah. So that is the bad thing. It has to be a primary residence. They have to file that it's their owner-occupied property. So they'll be filing the homeowner's exemption. And if they don't, then they will be reassessed automatically. So the passing of Proposition 19 means that inherited properties will be reassessed unless the heir is going to live there as a primary residence. If it's a family farm, if they're going to work that farm and live there as a primary residence, that also applies. So if there's multiple siblings, as long as one of them is going to live in the property and stay there and work the farm, they can qualify that as their primary residence. Now, here's the little calculation part about if it's over $1 million, they will be assessed at the current rate and reduced by $1 million. That's not the calculation I was talking about. That just has to do with high-end properties.
Okay.
So this is the first of the slides that I mentioned that I actually pulled from the Board of Equalization webpage. When you go to look at this webpage, it does detail all the great features of Proposition 19, and it shows you the former law that applied, and now Proposition 19, the current law. So these are super helpful. So there's 4 of these slides. So this is one for if you're 55 or disabled. This is the inter-county disaster relief. So again, previously, if you would have to be buying property between the properties that were qualifying. And then this is the slide that shows the parent to child or grandparent to grandchild exclusion. So it used to be that it didn't have to be a primary residence for the party that was taking it over. Now it does. You have to be primary residence in order to keep the previous tax basis to roll it. So qualifying from your primary residence, the idea is that you can sell your piece of property and then you have 2 years to buy another piece of property. So you'll go ahead and sell your property, keep that closing statement. You'll request the documents from the assessor that you're buying the property from. So say you're selling in Solano County, you're buying in Sacramento County. After you close your property that you're buying in Sacramento County, you'll contact that assessor and request the form to file the Prop 19 transfer. Super easy. It's a 2-page form, super easy to fill out.
Now, I got a question for you there, Liz.
Mm-hmm.
So if I have a client that's in the process of purchasing this home, this replacement home,
mm-hmm.
now, is that something that the escrow company can take care of during the process, or does the homeowner have to do it themselves and go approach the the assessor's office themselves?
You can actually pull the form from their website.
Mm-hmm.
You can actually mail the information in. So you would just go ahead and keep your closing statement. So you could put that information on there as far as filling it out for the property that you sold. It's a very easy form,
Okay.
but escrow companies cannot complete them because we view it as a tax liability if we were to complete it incorrectly.
That's helpful. Thank you.
Mm-hmm.
And now, is there a time frame? So after the client purchases the new home, is there a amount of time that they need to have that submitted by? Obviously, I would think as soon as possible, but is there a time frame that the county requires them to submit the paperwork?
So you want to have it submitted in time that they'll be able to reassess you when the taxes fall for the next tax year.
Okay.
So you can do it as soon as you purchase, but you want to do it by January of any calendar year to make sure you get it for the next calendar year.
Perfect. So to help help my clients. So when we're in this situation, would it behoove me to tell them, hey, we're in the process of getting this done. Maybe maybe download that paperwork so that when everything's said and done, they can just immediately send it themselves to the county. That way, we're not losing any time there.
They can certainly do that when they get there after the deed records, they're going to get a letter from the assessor anyway, confirming that it's going to be a primary residence.
Mm-hmm.
So if you check that box on the change of ownership form that you sign at title, that will automatically trigger something from the assessor to come to the buyer. So that would be the time they'd want to go ahead and make sure that form got sent back with the form of sending.
Okay.
So it's kind of going to trigger them to know that that's okay. I got this form. I knew I was going to get this form. Now I have to send the form in so that I can complete my transfer.
Okay. So it would make sense that they would need to do it after they get that notification from the county.
Mm-hmm.
Okay. So that's helpful. Again, I want to make sure that I can tell them what exactly, because obviously if people are going to watch this video, it'll be helpful, a year from now when they're actually making that purchase.
Mm-hmm.
It may be a distant memory. So I'm going to make sure that I add into my reminders to follow up with them or to let them know in the processing, hey, yeah, when you get that letter from the county, make sure you also include the Prop 19 form so that you can transfer your tax base.
And most assessors are really great at explaining it and telling them exactly how to download it and where to send it. It's actually really easy to do. Excellent. One thing that's important though is that you have to, if you buy a property 2 years and 1 day after you sold your other property, they don't qualify.
Oh, gotcha.
Yeah, they have to buy within 2 years.
And that's okay. That's very helpful. And
yeah.
I suppose in most cases, at least to me, I believe most of the time it's going to be, I would not expect that 2 years to become a factor, but it's definitely good to remember that in case.
Well, there's some people that maybe if they lost their house in Pollock Pines, they're figuring out where they want to move.
Oh, that's a good point.
So,
very good point.
Yes. So if they're saving their money, there's lots of reasons why that might be.
Very good point.
If you're actually buying a new construction, you need to be in the house and have purchased it within the 2 year period.
Okay.
Be closed on it. So yeah, the closing date is what they're looking for.
Gotcha.
Okay. So again, if you sell your house, this is obviously an outdated slide, but you do need to purchase the new house within the 2 year period. Again, what allows you to do this is if you are over 50, 55 or older, disabled, or have lost your house due to a natural disaster. So Prop 19 is not retroactive. If you have already transferred your tax basis by Prop 60 or Prop 90, that doesn't mean that you can no longer do it. You actually can continue to do it for those 3 additional times. They don't count that as one against you. So again, you can still transfer 3 times under Prop 19, kind of the same question here. So you can transfer your previous tax basis to a home of any value. And that's a great feature of Prop 19. Previously, you could only buy a property that was equal or lesser value to transfer your tax basis. So the idea behind it is that you're going to transfer your property tax value based on the sales price. So this gets a little bit confusing. So we have this example here. So if you sold your house at a cash value of 400,000, but you were paying taxes at 100,000, okay? So your old tax rate was at 100,000. You sell your house for 400,000. You're going to buy a new house for 600,000. You're going to take that difference of the $600,000 house you buy and the $400,000 house that you sold and add the 200,000. So the 600,000 less the 400,000, you're going to add the $200,000 to your tax basis of 100,000. So your new tax basis will be 300,000.
Okay, yeah, that makes sense.
Mm-hmm.
So, which is still a substantial savings.
Yeah, exactly.
And definitely, that's definitely it opens up the door too. Because I've been talking to a couple different clients right now, where their sale in the Bay Area is probably going to be somewhere in kind of in the close neighborhood of what they're looking for. And I remember back when Prop 90 was still available in El Dorado County, that we would have had to adjust our search based on that. Now this makes sense. So so if we look at the $600,000 house, even if it's just a flat 1%, which we know is never the case,
right?
That's a $3,000 a year savings, even with taking into factor that extra $200,000 of basis added to the tax base. Right. So that's fantastic.
Yeah, so it's really great for someone who's retired. They can actually kind of keep their same cost of living and even buy a bigger, nicer house. So it's a really great feature.
Excellent.
Yeah.
Excellent.
Okay. So again, we talked about the benefits. This is the one downside. So if you are acquiring property through a gift from your parent or your grandparent, the only way to keep the tax basis that they were paying is to have it be your primary residence. So if you are gifted the property, you'll need to go ahead and file that it's your home. So you'll want the homeowner's exemption to go ahead and keep that tax basis. So if you don't file that it's your primary residence, it will automatically be reassessed. So, and that's once you acquire the property either by an affidavit of death of trustee or whatever it is. However you acquire the property, unless it's going to be your primary residence, it will be reassessed.
Gotcha.
So they had to get money somewhere here.
Oh yeah, so, yeah. That was the trade-off that that happened in the negotiation of that proposition.
Right. I would say though, if this somehow affects you in any way, to contact your tax person immediately and just see if there's any way around this, any way out. Because I'm not a tax person and I can't confirm that this doesn't affect you.
Yeah.
So again, if I inherit my family home and move into it and establish it my primary residence, I do need to live in the property to keep it as my primary residence. Make sense? Yeah, It has to be your primary residence, yeah. So Proposition 19 does not in any way, shape, or form apply to a rental home. So if you're not going to live in the property as your primary residence, you cannot use the benefit of Proposition 19. So there's no extension to the 2-year period after you sell your house, even if your new house is delayed by construction or your seller cannot cooperate with you buying. You do need to close your new transaction, your new house, within 2 years after the close of your sale.
That's actually really helpful right now, especially with the delays we're seeing with new home construction. If there is anybody that's on that cusp, that may be. Hopefully we'll see that come to play, but that's definitely something to put in the back of my head when we're approaching these situations.
Or if you're buying a property that has a tenant in it, that could be an issue too.
Okay.
So once you get your application, it's been approved. So say the taxes have already been generated and you've paid at that higher amount, the tax collector will they'll review the taxes when they reassess at the beginning of every year, and you would get a refund if you overpaid because they weren't aware of you transferring your tax basis. So you will be made whole at some point. And if you have questions as to how soon you're going to get your refund check, you can contact the county tax collector at that point in time. But you will be made whole. I think that might be the end of my slide.
Well, fantastic. That's awesome. I really do appreciate what you shared there. This really brings a lot of clarity to me because, again, I joke, and you'll see the thumbnail, kind of like the picture of me pointing out this complex. I think I stole the picture off of A Beautiful Mind, like this.
Oh yeah.
This ungodly math problem, and next thing you know, 20 minutes here, and I've got clarity. So if I understand it correctly, the math to calculate it's pretty straightforward. It's based upon, if you increase value, you just find the difference between what you sold for and what you purchased for, and it adds on to whatever that basis is.
Exactly.
And if it doesn't increase, it's just, like, say if in that situation where I sold for 400,000 and bought for 300,000, that just transfers over.
Exactly. Whatever the tax basis is.
Wherever you were before.
Yeah.
Okay. And again, that's very substantial. Especially where the price points where we are today. If someone moves into our area and purchases a home for $700,000-$800,000, and they've got a $250,000-$300,000 tax base.
Right.
That's $5,000 a year right there.
Right.
$4,000 to $5,000 a year. So
it's a lot of money.
Well, this is great. I really do appreciate this.
Sure.
I will make sure when you send me all the information, I'll attach it into everything that I'm providing here, along with, I think I found something off of directly from the Bureau of Equalization website as well. So all of the folks that are watching this will have access to it. And ongoing, is there anything else that we would need to know, or if we have any questions, or if I have any questions, what would be the best way to get some of those questions answered? Should I just reach out to you? Should I reach out to Scott? What would be the best?
You could reach out to Scott. Probably if you really wanted to go to the source, you contact the county assessor where you are, or the Board of Equalization.
So the county assessors are our friends, even though they take our money.
Yes, they are our friends. Really, they are.
Excellent. Well, hey, I appreciate this. I'm going to go ahead and wrap up the video, and then we can wrap up our conversation. But for the purposes of this video, I hope you get some great value out of this. And obviously, when it's time to make that move and you're ready to, make your move into your next home and you want to save some money, let's get you going. We'll walk you through this process. It is simple. I feel comfortable with it now. So I'm comfortable to guide you through this process. And thank you for your time, folks, and have a great day.
Okay.